The ticker is RIG, rising in the pre-market by 2.1%, trading at $47 a share, reporting a third quarter loss that widened. But this was a fairly messy quarter because of a rig sale write-down. Remember, Transocean, the biggest owner of offshore rigs, the revenue also missed analyst estimates as well. Nevertheless, stock moving higher right now.
Well, another one to watch would be Toyota, of course, trading in Japan as well as the United States. The automaker there raising its full-year forecast, citing strength in the auto market, particularly in the United States and Japan. We've been speaking a lot about this, the stronger auto sales that we've gotten here in the U.S. Toyota, for one, is benefiting.
Well, if you live on the Northeast, you're certainly happy that you have a Prius if you have one. You can avoid those long gas lines.
Absolutely.
There you go. But you've got to be able to plug it in. So if you don't have electricity, you're not going to be able to do that either.
Yeah. Well, there's somewhere that has electricity.
You still don't have that electricity. So
no, I don't.
Get you that very long
Thank you for that
cord.
reminder.
Yeah, it's okay. Just want to make you feel better about it.
All right, let's look at HSBC shares. They're also on the move this morning in the pre-market, down right now by 1% to 49.40. This is the UK bank. It said it's likely to face U.S. criminal charges for money laundering probes from the U.S. And the cost of a settlement could significantly top the $1.5 billion that the bank has set aside. HSBC actually just put aside an additional $800 million on top of what it already had, which was about $700 million. So $1.5 billion so far and counting.
And Scarlet, another stock we always keep an eye on is Facebook. Story there with some of the shares.
Yeah, the IPO, right? Mutual funds run by three of the banks that helped Facebook go public were quick to flee the stock when the company went public in May. Turns out that those banks were also among the first to sell when the social network giant stock began tanking soon after the IPO back in May 17th. Mutual funds managed by Morgan Stanley, JP Morgan Chase, and Wells Fargo bought 8.4 million shares of the company. Those shares were $319 million. But by the end of the month, the funds had sold 3.5 million of those shares. And during that period, the stock dropped, as we know, from, remember, $45 on the first day to $29.60 by May 31st. This is according to the Wall Street Journal, which crunched all these numbers from Morningstar.